We believe it has a long way to go, has only just begun, and is currently the largest artificial intelligence project in the world. At 27 its price target, we believe it is terribly cheap, and we are prepared for the big moment when consumer preference shifts towards better electric vehicles whose prices are dropping as a result of passing savings on to its customers. Tesla is at the forefront of this price drop. Greetings, fellow investors. I have a question. When is the best moment to invest? Well, I may have just found the answer. Today, we're revealing a secret that investors all over the world have been waiting for. Are you prepared to find out when to purchase Tesla stock and potentially make millions? We're going to discuss the complexities of Tesla's stock, the forces behind its potential surge, and how this may be the investment opportunity of a lifetime in Cathie Wood's latest revelation. The anticipation has been building, and now it's finally here. Mark your calendars for when we reveal this revolutionary insight that has the potential to alter the trajectory of your investment path. You're about to read the secret to a future brimming with opportunities, not merely another stock analysis. Prepare yourself for an exciting journey into the world of finance. Here we have the latest Tesla stock news, where opportunity meets wealth. Make sure you subscribe, enable notifications by clicking the bell icon. Now is the time to go on the trip to millions, even if many organizations are currently facing obstacles. Because of Tesla's exceptional performance this week, we've decided to dive into the company's dynamics and examine its distinctive market position, which has attracted a lot of attention. Tesla, a name synonymous with innovative electric automobiles, offers a fascinating contrast when we compare the company's production volume to its market price. The results are staggering, particularly when compared to other companies in the field. There has been talk of a notable increase in the long-term forecast for Tesla has been revised, but many still think the company is undervalued. First, that Tesla might lose a third of its market share. Second, that Tesla's global market share, including the Chinese market, actually increased last year. While this growth despite the arrival of so-called Tesla killers from well-established brands, like Audi and Jaguar, is a commentary on the automotive industry as a whole, not just on Tesla's success. A lot of well-known automakers are having a hard time getting into the electric vehicle market. Let's take a look at the economic implications. In the next 18 to 2 years, the cost of electric vehicles is predicted to drop below that. This is a clear indication of their struggle with battery technology and their inability to efficiently adapt to the evolving demands of the market. As a result of falling battery prices, this trend is expected to persist. Old-fashioned car companies that have invested heavily in internal combustion engines are at a crossroads. Due to the urgency of the situation, Tesla was invited to construct a large facility in Berlin, Germany. Now let's talk about investment, because this step shows that the industry is recognizing the urgent need to adapt or lose a lot of jobs. Among tech stocks, 2023 has been out of this world. As of early August, Tesla's shares had skyrocketed by an amazing 110, which is in line with the 34 growth in the Nasdaq Composite Index for the year. However, it's not only Tesla. Given the impressive rise in the tech sector, investors are left wondering, is Tesla the stock to keep an eye on in 2023? The answer is complex, depending on factors such as the company's performance, the overall trajectory of the industry, and the market's reaction. Let's change the subject to Facebook and Tesla for a bit. Both companies have shown incredible resilience this year, reflecting the renewed interest in growth stocks. This follows a challenging 2022, when many favored stocks saw steep drops of 30 to 40. While these kinds of fluctuations are scary for some investors, seasoned market watchers know better. The 110 surge in Tesla's stock in just 7 months in 2023 is a prime example of the ever-changing nature of the stock market. The rapid growth is a testament to Tesla's strong performance and investor confidence, but it also highlights an important aspect of stock market investing: the inevitable fluctuations. Seasoned investors are familiar with the stock market's cyclical nature and know that even highly successful firms, such as Tesla, can be caused by variables, including market corrections. For example, a tech and innovation leader in the electric vehicle industry, like Tesla, could encounter ups and downs as a result of shifts in technology regulations, changes in investor sentiment, or the dynamics of the competition. You should know that investing in the stock market always involves some degree of volatility. An experienced investor approaches market dynamics with a strategy that includes diversification, a long-term perspective. They recognize that while understanding of the underlying business can be unsettling, they often do not reflect the long-term potential of a company like Tesla, known for its innovation, market leadership, and growth potential in the electric vehicle sector. Additionally, seasoned investors often employ downturns as opportunities for growth. based on the belief that a temporary decline in a fundamentally strong company's stock price presents an opportunity to increase one's position in the stock at a discount. This approach seeks to answer the question, is now the right time to add Tesla to your portfolio? It's also a good time to remind those who haven't invested in Tesla, yet the traditional auto companies are only just beginning to enter the electric vehicle market, so it's important to proceed with caution. First, Tesla has a leg up in the race to autonomous driving thanks to their innovative battery technology. Second, they have a proprietary AI chip that puts them 4 years ahead of the competition in chip technology, according to our analyst James Wang, who is formerly at NVIDIA. This is vital in a world where data is king. When it comes to real-world driving data, Tesla is head and shoulders above the competition with an astounding 14 billion kilometers. While Tesla's ability to improve vehicle performance through over-the-air software updates sets it apart from other manufacturers, the company's financial performance has been impressive, with $25 billion in revenue and 78 cents in diluted earnings per share. However, there have been some challenges that Tesla has had to overcome. One of these is a significant decline in its gross margin, from 25 to 18 year-over-year. This decline has worried investors and highlights the complexity of the industry. There are a number of reasons why Tesla's gross margin has decreased as the company navigates a market that is changing at a rapid pace. This is due, in large part, to the fact that the company has decided to cut the prices of its vehicles multiple times this year in an effort to boost demand. This move was made in response to rising interest rates and inflationary pressures, which have the potential to reduce consumer spending, particularly on large ticket items like cars. A lower gross margin as a whole with interest rates on the rise. The cost of financing becomes more significant in this context. The desire for vehicles and other large expenditures can be dampened by inflation, which reduces consumers' buying power and makes them wary of spending money on non-essential goods and services. A strategic balancing act is on display in Tesla's reaction to these economic pressures. Reducing prices has the dual benefit of making the company's vehicles more affordable to a wider range of consumers, which could increase sales and market share. But it also has the potential to squeeze the profit margins, which could impact short-term profitability. Companies in the automotive business must constantly adjust to shifting economic conditions, which is a larger issue that this situation illustrates. In market trends, customer tastes, and Tesla's rivals, it is important to analyze Tesla's current position and prospects with a balanced view of the market and economic realities, balancing enthusiasm for its technological advancements with a clear eye on managing these dynamics while maintaining growth and profitability. In light of the current economic climate of high interest rates and inflation, consumer spending power is affected, influencing the decision to purchase high-value items like electric vehicles. This balanced approach is championed by investors. The current economic climate has consumers rethinking major purchases, including cars. In response, Tesla has strategically offered discounts, which has boosted sales but also impacted their gross margins. Was this the wrong move? Investor legends like Warren Buffett play a crucial role in making informed investment decisions. May potentially, although Tesla's pricing approach is in line with the guiding principle of financial guru Warren Buffett, which has long stressed the critical role of responding to changes in the economy. Other factors are also impacting the company's bottom line. A major contributor has been the company's research and development spending, which surged to an unprecedented $943 million, a 41% increase from the previous year. Spending nearly $1 billion in a single quarter may raise eyebrows in terms of current profitability, but it's a bold move that demonstrates Tesla's drive to remain at the forefront of the electric vehicle race. Maintaining Tesla's leadership position in the industry is crucial for both the company and its investors. So this billion-dollar investment in one's perspective is more than a short amount of time. Tesla has become an industry powerhouse in the automotive and technology industries. Thanks to its investments in manufacturing, Tesla is also building a cost advantage in car production, which stands in stark contrast to legacy manufacturers like Ford, who are still struggling with profitability in their electric vehicle divisions. Its unique designs and forward-thinking strategy have proved disruptive. Renowned industry expert Cathie Wood had foreseen this situation in which conventional car companies would struggle to compete with Tesla without losing money. The venture into autonomous driving is another thrilling chapter in Tesla's story. While the company's full self-driving capabilities are still in the works, they do require driver attention and intervention when needed. Elon Musk's vision of a fully autonomous future has the ability to turn Tesla into a provider of robotic taxis, a sector ripe with opportunity for massive revenue and profit growth that could one day justify the stock price of Tesla. Considering the broader context, although Elon Musk's ambitious timelines have been challenged in the past, the short-term fluctuations in Tesla's gross margin and profitability don't seem to matter when compared to the company's long-term prospects. During the Q2 earnings call this year, Musk expressed confidence that autonomy would revolutionize the company's financials. Investors and market enthusiasts are right to wonder how Tesla's pricing strategy will impact the company's long-term profitability in light of the company's impressive financial achievements in 2023, including revenue that surpassed expectations and a substantial increase in stock value. On the flip side, the company faces challenges, such as declining gross margins and the need to strategically adjust prices in response to economic pressures like rising interest rates and inflation. We invite you to share your perspectives in the comments section below if you find our content informative and engaging. If you want more in-depth analysis and updates on Tesla's financial journey, consider subscribing to Tesla Stock News. Also, let us know if you think the company can maintain its market leadership amidst these economic headwinds. Much obliged for tuning in.